Now to Russia, perhaps with love. The it girl in Russia, Ksenia Sobchak, the pampered it girl of Vladimir Putin's Russia, the author of Philosophy in the Boudoir and How to Marry a Millionaire, has restyled herself as a leader of the political opposition. Last week, Ms. Sobchak hosted protest leaders on her new political talk show, which was canceled by Russia's MTV after just one episode. It is now broadcast on a website. So what's the future of investments in Russia? Let's ask an expert. My next guest, Scott Licamele, who handles equity sales at Troika Dialog USA, which is the investment banking arm of Sberbank. That's the largest financial institution in Russia and the Commonwealth of Independent States. Scott, always a pleasure. Thanks for coming in.
Thank you.
So can you explain how, I believe, Ms. Sobchak is the goddaughter of Vladimir Putin, and she has been out protesting his first-round victory in presidential elections in Russia. I mean, if that's not a change, I don't know what is. What's going on?
Well, as we all know, there have been a series of protests, initially after the parliamentary elections in December, and then leading up to kind of fizzling out, really, up to the final presidential elections that we saw recently. And I think that that's indicative of just overall dissatisfaction with issues such as the level of corruption in the country, which plagues many emerging markets and certainly most transition economies that we see throughout Eastern Europe. So I think it's interesting to look at Russia from the equity investment perspective. We're looking at it in terms of the potential upside risks, because the current valuation of Russian equities, basically they're trading at a substantial discount to global emerging markets peers, which is actually almost double the discount, the average discount that they usually have. Usually it's about 15%. Now it's at about a 30% discount.
Why the discount in Russian equities? Is it because investors look at news reports, they look at the video, and they see protesters, and they say, all right, I'm going to avoid Russia because I'm worried about political risk?
Yeah, I think there's a couple of factors. I think the principal issue is that the perception of political risk has not decreased. I think you've seen a political risk fears receding on the fixed income side, where particularly in the sovereign fixed income space, you've seen bond prices recover quite robustly, and particularly across Russian credit. On the equity side, unfortunately, the market, so to speak, has not really caught up yet to that, and we see that there's significant potential upside as the fears of political risk and the opposition recede, because we've seen basically that those issues kind of calm down in the recent weeks. So that's kind of how we see the market. I mean, obviously there are pockets of value within the market as a whole, but
what about oil? That's a big one when it comes to Vladimir Putin and Russia, right? Without high oil prices, how do they pay for everything?
Absolutely, yeah. I mean, if you look at the Russian stock market compared to the price of oil, it's trading at a very substantial discount. I think, unfortunately, one of the problems with investing in the oil and gas sector is that the CapEx requirements in the sector are very high, and there are frequently value-destructive CapEx programs, particularly in some of the state oil and gas companies. So that's a challenge. I think also there's also an unstable tax regime, and the government really needs to sort that out and get a more coherent structure in place, which I think is happening. I think the attempts are being made, but again, it's a gradual process of reform and restructuring of this economy.
Scott, you were telling me that Vladimir Putin, all right, he wins the first round of the presidential elections, that he is starting to institute some of the reforms that even the opposition have been calling for.
Absolutely, yeah. He was present at our investor conference that we had in Moscow a few months back, and basically what he was talking about was implementing a series of reforms in order to improve the investor climate. I think that accession to the World Trade Organization is a key point and a key issue that they've finally tackled, and also just attempting to improve the overall business environment and transparency within the legal system and the economy, I think, are steps that they need to take, and that they've stated, he's stated that his next government will take. So we're confident that he can make progress in those areas.
And the data, when you take a look at the actual financial data, economic data from Russia, it's really not bad. It's pretty good.
Very strong. The country is growing at it should grow about 4.5% this year, GDP growth. A post-Soviet low of inflation rate of about 5%. Unemployment is very low, and you've got very low debt to GDP, 27% foreign debt to GDP. So basically, macroeconomic conditions are highly stable, and domestic demand is driving the economy.
All right, so you've got this discount. You were talking about the discount that equities are trading at about a 30% discount. They normally trade at a 15% discount to their emerging market peer group. What industry groups in Russia right now? You mentioned consumer demand, so I got to think consumer what? Discretionary spending?
Absolutely, yeah. Consumer
staples?
staples, consumer discretionary. Real estate is another sector that we favor. We also like financial institutions, both private and public, both private and state-owned, across the board.
All right, I want to thank you very much. Scott Licamele joining us from Troika Dialog USA.